Hi everybody, Dale Pinkert here. Dollar followed through to the downside, actually hit some targets I talked about last week. If you can see the both the pink and red line converging there around 97.20. So first objectives have been achieved. I just want to remind everyone we have ECB later in the week. We'll see if Draghi could talk down the euro. Euro had a great day, with the dollar being especially weak against that compared to the pound. And talking about euro pound as a counter trend short, began to put a little bit of that on today. If the dollar continues lower, looks like next stop would be the lower red line around 96.70, along with the 200-day moving average right around that 96.5 level. Definitely looks like there could be a shift. I know that there's some dollar bulls still thinking this might be a low, and Draghi's really going to be the catalyst for another surge higher in the dollar. Well, I don't have to worry about that because you never go broke booking profits and taking profits. Bernard Baruch said that. Had a couple of good clients, the Rockefellers and the Kennedys, in another age and another time. So definitely from last week and recommitting to the short side, the dollar has paid handsomely. After this, I wanted to go to the VIX because we've had a pretty dramatic sell-off here in the stock market. We've taken out the lows of May, and as I showed in the past few contributions, we had a pretty serious sell-off. Now, something the bulls may be able to hang their hat on is, although in price, the S&Ps, the Nasdaq, especially today. In fact, take a look at Google, and you'll know that I featured that. Gosh, up near the top, and then talked about it continuing to the downside to check last year's lows. That looks like that's manifesting. The fact that the VIX is not above 24, with prices taking out where the VIX was, the S&P was when the VIX was up there around 2360, may be a little bit of a tell. Either the market's still very complacent about this, or there's some type of bounce coming. I still would prefer buying weakness in the VIX. I think that the 17 level to 1650 should hold on pullbacks, but this is one indicator that's saying is not confirming the break that we had last week. So we'll see what happens. A weakening dollar could be actually constructive for your tri-nationals and commodity related stocks. So I wanted to wrap it up with a commodity that I've been talking about for a few weeks. It finally manifested. I was talking about a breakout in silver out of a falling wedge, and we had it attempt to do it on Friday, but definitely followed through here. Now approaching a convergence of moving averages up around the 1485 to 88 level. Again, something that I teach my mentees, that if you're long anticipating this breakout, which could have quite a ways to go, what you do in here is you take partial profits, you take part of your position off, and say, for example, you were risking the lows at 1425, you can now move your stop up to actually be a profit stop up around the 1450 level if you want to let some run. But ring the register. It's also important to get paid when you're right. Remember, don't just count your pips, count your blessings. This is Dale Pinkert. Good hunting, and I'll talk to you tomorrow.